Welcome to Asia Granny Bites, thematic stock plays in China and beyond, on the Piranha Profit YouTube channel. I'm Mr. Piranha, joined by Ms. Profit.
We're here to bring you actionable insights for retail investors, adapting fund strat, GR&Y themes to high-growth Asia markets. Every Wednesday at 2:01 p.m. UTC, 10:01 a.m. ET, 7:01 a.m. PT, 15 to 20 minutes, or 2025 for this premiere.
This is for entertainment only, not financial advice. Invest at your own risk. Past performance isn't a guarantee. Do your research and consult a professional. Full disclaimers, including no liability and subscription details, are in the description.
Let's dive into the markets. Trade smart, piranhas.
Welcome to our market adventure, folks. Today we're diving into a wild ride that, mixes PMI recovery with energy and cybersecurity updates, all set against a backdrop of big macro events in Asia.
Yeah, definitely. Right. So we have Mr. Piranha taking a big, bold bite out of PMI recovery, while Ms. Profit teams up to bring in the energy and cybersecurity angle. Quite a combo, wouldn't you say?
Absolutely. It's, like riding a roller coaster, where every twist brings a new market update. Let's kick off with the headline: President Trump's tariff threat. He's, slapping a 100% duty on Chinese imports starting November 1st, which has already knocked export stocks, especially those in EVs and chips, down by 2 to 3%.
And then, on the other side, we have President Xi Jinping with his stimulus package rolled out on October 24th. With RRR cuts and a steady 1.4% reverse repo rate, it fired up the CSI 300, especially in EV and tech stocks, with rallies reported in the 3 to 5% range. It's like, a spark in a dry forest, right?
Exactly. It's like, there's this delicate dance between policy pressures and market optimism. And speaking of policy, Treasury Secretary Scott Bessent's trade deal on October 26th is another twist, boosting agricultural purchases and delaying rare earth controls. That move lifted the Hang Seng by a neat 1.5%.
Interesting. But Bessent wasn't just handing out good news. He also served up a cautionary note, warning of a potential 5 to 10% hike in U.S. consumer costs. That could seriously, throw a wrench into the supply chains.
Yeah, it's a bit of a double-edged sword. On one hand, markets are jittery. Luckily, we do see, for example, the CSI 300 EV stocks up about 4% this week on the hope of this stimulus. But then, you have the tariffs casting a long shadow.
Right, it's like balancing risk and reward. Speaking of balance, let's talk numbers. In China, PMI is at 51.2, so manufacturing strength is holding. And then there's ASEAN +3 growth at a steady 4.1% for 2025, while India is cruising at 6.6%. It's like each region is doing its own dance.
Yep, and in the currency department, the Yuan's down by about 1%, which, interestingly, seems to be spurring bursts in EV and cyber stocks. It's like, sometimes a small dip sparks a big leap in related sectors.
Now on to some star players in this market saga. The first Piranha pick is BYD, ticker 1211.HK. This Chinese EV titan is burning up the charts, up 30% year-to-date with 18% revenue growth and 20% margins. Their innovation and scale are key strengths, though they do have high production costs that might slow them down.
Right. And let's be honest, while innovation keeps them ahead, tariffs still pose a threat on exports, which adds that extra layer of risk. It's like having a fast car, but then worrying about fuel prices.
Spot on. And then we have Fortinet, ticker FTNT, standing tall in the cybersecurity arena. Up 15% year-to-date, with 12% revenue growth and 25% margins. Their robust demand in cyber, riding along with the energy/cyber wave, makes them a solid choice. Although, they do face fierce competition, don't they?
Exactly. It's like being very strong in a tech-driven race where the track is crowded with competitors. Their moat is moderate, but the pricing pressures might just be that, nudge they need to work on.
Yeah, I see that. Now, moving on to the fresh faces, the IPO side of things, which they call Piranha Sniffs. First up is Mining Lamp Technology from Hong Kong, ticker 02718.HK. It launched on November 3, 2025, at 141 Hong Kong dollars and carries a FOMO rating of 9 out of 10. It's riding on AI data analytics and even has backing from Tencent. That's a serious vote of confidence.
Right. But let's break down its SWOT a bit. Its strengths are clearly in cutting-edge AI and that strong investor support. However, with competitors like SenseTime and, potential risks from tariffs, there's tension in its growth story.
Then there's CloudWalk Technology from China, ticker 688456SS. It's another gem aligned with PMI Recovery and Energy/Cybersecurity. It launched on November 4, 2025, with a price range of 30 to 35 renminbi and has a FOMO rating of 8.5 out of 10.
Yes, its strengths lie in AI facial recognition and cybersecurity applications. But again, those tariff risks and regulatory scrutiny are constant threats. It's like, walking on a tightrope sometimes.
Yeah, very much so. Next up, Tata Consultancy Services, strategically tied to PMI Recovery and global labor suppliers, ticker TCSAI.BO from India. Launched on November 3, 2025, at a price range of 4,000 to 4,200, with a FOMO rating of 7.5. They shine in AI-driven IT services, but the competition from, say, Infosys, keeps the stakes high.
Right. It's like having a reliable engine but racing against equally powerful rivals. Its moat is moderate, largely based on scale, but even that can get, a bit crowded sometimes.
Absolutely crowded indeed. And last, we have CJ Healthcare from South Korea, ticker 082660.KS, which fits with PMI Recovery and Energy/Cybersecurity as well. Launched on November 3, 2025, with a pricing range of 50,000 to 55,001 and a FOMO rating of 7.5. Its strength is in healthcare innovation and stable demand, though regulatory hurdles might slow it down.
It's like they're innovating in a field that's pretty critical, but always under the watchful eye of regulators. Their R&D investment gives them a moderate moat, which is reassuring. But those hurdles, as you say, could be, a stumbling block.
Yep, exactly. Now, one thing I want to, challenge a bit is this heavy reliance on the FOMO ratings and SWOT analyses. While they provide a clear snapshot, don't you think they might, oversimplify the complexities involved in these sectors?
That's a fair point. I mean, it's like looking at a painting through a very colorful but sometimes narrow lens. The FOMO ratings give a quick view, but there are layers like market sentiment, geopolitical risks, and even unexpected tech shifts that these metrics, might not fully capture.
I agree with that. Exactly. And speaking of layers, the overall market situation in Asia is, really multidimensional. From President Trump's aggressive tariff stance to President Xi's stimulus efforts, there's a whole tapestry of moves that affect everything from exchange rates to sector-specific rallies.
Yeah, it's like every policy move sends ripple effects, across stock indices and sectors. You've got export stocks trembling under the prospect of tariffs, while domestic stimulus measures give a leg up to EVS and tech stocks in China.
Right, it's very dynamic. And let's not forget the macro indicators. China's PMI at 51.2 is a signal of manufacturing strength. And then we've got ASEAN +3 growth holding at 4.1%, while India is hitting 6.6%. These numbers, really set the stage for what's to come.
Yup, and the interplay is fascinating. Like, the Yuan down by 1% might actually be fueling some bullish sentiment in key sectors like EVs and cyber stocks, counterbalancing the challenges created by tariffs and policy uncertainties.
For sure. Now, circling back to the thematic blend, what do you think about the role of energy and cybersecurity in this overall narrative? It seems like they're not just side notes. They're integral to driving investor confidence.
Right. It's like plugging into two very powerful energy sources. Energy demand coupled with the imperatives of cybersecurity creates a multidimensional investment landscape. These factors are creating niches that can withstand wider market volatility.
Makes sense. And if we think about it, the diligence in picking stocks like BYD and Fortinet reflects a broader trend. Investors are really looking to balance growth with innovation, while simultaneously hedging against geopolitical and regulatory risks.
Exactly. And it's interesting to note how the metrics are broken down into fundamentals and technicals. For instance, BYD's fundamentals scored an average of 8.43 out of 10, with revenue, margins, debt, ROE, free cash flow, and even DCF undervaluation all feeding into that score. Meanwhile, technical analysis gives it an 8.33 out of 10. Put together, it's a sizzling 8.4 out of 10 overall.
Right, nice breakdown. That level of detail definitely helps investors get a clearer picture, but it also raises a question. Do you think these averages might mask some underlying volatility? Because averages can, sometimes smooth over outlier risks.
That's a valid critique. While the average scores paint an attractive portrait, there could be complexities beneath, such as production cost volatility for BYD or fierce competition for Fortinet. It's like a glossy cover on a book that might have a few challenging chapters.
Exactly. It's not all sunshine and rainbows. Moving ahead, it seems the IPO segment is particularly exciting. All these new players, from mining lamp technology to CloudWalk technology, are practically rockets waiting to launch. Their FOMO ratings almost tell the story of investor eagerness in a very direct way.
Right. It's like capturing the zeitgeist. Investors are chasing these high-rated IPOs, and with solid backing from entities like Tencent and strong themes in AI data analytics and facial recognition, there's a lot of buzz.
Yeah, absolutely. And while each IPO comes with its own set of challenges, like tariff risks or regulatory scrutiny, they also offer, windows into how sectors like tech and healthcare are evolving during the PMI recovery.
True, it's compelling. Each IPO, whether it's Tata Consultancy Services bringing in a global labor component or CJ Healthcare focusing on biotech innovation, represents a unique narrative woven into the global recovery story.
Very nuanced. So, to sum it up, our current market narrative in Asia is, this intricate interplay of aggressive tariffs, tailored stimulus measures, and key investment picks that blend traditional sectors with next-gen tech trends. It's a multi-layered story where every policy move and every new IPO plays a pivotal role.
Exactly. And with the blend of energy, cybersecurity, and PMI recovery themes, investors are watching this space intensely. It's like a market buffet with a little bit of everything. Some spicy tariffs, sweet stimulus, and a steady stream of innovative companies.
Yeah, it's a feast for sure. And as always, staying informed means keeping a keen eye on both the big macro moves and the finer details of individual stock dynamics. It's been a great deep dive today, really illuminating how complex and, exciting the market can be right now.
Absolutely. Thanks for joining in on this high-energy market adventure. Until next time, keep riding the waves and, stay curious about every twist and turn.